This is your LMAX Exchange technical update for Monday, January 30th, 2017. Euro dollar. So right now it's hard to determine which way the euro is going to break. On the one hand, we have this market correcting out from recent 14-year lows in early January of 2017 and continuing this correction. This latest pullback is adhering to an upward channel, which could see another higher low ahead of fresh upside and a continuation of this correction. On the other hand, this market has reached some critical resistance just shy of the December peak at 108.75, warning of the potential for a lower top and bearish continuation. So again, we have to wait and see. The key levels to watch above and below as far as trade on Monday go are the high that we saw last week, which comes in at 107.75, and recent support, which comes in around 105.90. So 107.75 and 105.90 are the key levels to watch above and below, which will give more clarity. Sterling dollar. So cable came all the way up, stalling just shy of some critical resistance in the form of its December peak at 27.75. A break above that level would suggest a shift in the structure and a more significant longer-term base, but inability to establish above 27.75 will keep the pressure on the downside and could open the door for another setback back towards that plus 30-year low that we saw all the way back in October of 2016 at 118.40. Dollar yen. So dollar yen setbacks have stalled out at 12.50, and the market could be in the process of putting in a higher low ahead of that next major upside extension. At the same time, the market could just as easily stall out here in favor of a consolidation and a continuation of this correction lower down from below 112.52, that recent low, and into the 110 area. So again, we're going to have to wait and see. Key levels to watch above and below. Above on a short-term basis, resistance comes in at 115.62. A close above that level will suggest that the market is ready for a bullish resumption, while support at 12.52 needs to be broken to the downside for a continuation of this correction off that multi-week high at 118.67. Euro Swiss. So the Euro Swiss has been slow and gradual to the downside, but the pressure does remain on the downside, and the market could be readying for a retest of the 2016 base at 106.24. At this point, we need to see a close back above 107.60 to take the immediate pressure off the downside. Aussie dollar. So Aussie gains stall out last week at 76.10, and the market now could be looking to reverse lower for a continuation of what is a broader downtrend. But at the same time, if the market pushes back above 76.10, it'll open fresh upside towards more significant medium-term resistance in the 78 area. Ultimately, though, it would take a break back above 78 to force a significant shift in the structure, with any rallies ahead of that level to continue to be favored to stall out in favor of a bearish resumption. Dollar CAD. Dollar CAD has been trading within a longer-term constructive outlook, and so recent setbacks should be very well supported into the 130 area in favor of a resumption of gains back towards the recent multi-day highs at 136. At this point, only a close below 130 would compromise this constructive outlook. Kiwi dollar. So Kiwi gains in 2017 have finally showed signs of potentially stalling out after the market put in a bearish reversal day last Thursday, putting in a high at 73.12, which now could be that next lower top ahead of a bearish resumption and a bearish continuation back towards medium-term support down well below 70. At this point, it would take a break back above 70.46, the 2016 high, to compromise what looks to be a more toppish outlook for Kiwi. SPX 500. The S&P 500 is trading just off fresh record highs from last week, just above 2,300, and there is still risk for this market to now continue higher towards a measured move objective in the 2,320 area. At this point, if we do see setbacks, they're viewed as corrective, and we would need to see a break all the way back down below the low from the 30th of December of 2016 in the 2232 area to compromise the current intense bullish structure. Gold. So although we've seen gold setbacks over the past several sessions, the market should start to find support, if not already on Friday, should start to find support ahead of 1160 in favor of that next upside extension beyond recent highs in the 1220 area and towards the 1240 to 1250 area further up. At this point, only a close back below 1160 would force a potential compromise of a more constructive outlook, while ultimately a break back below 1122 to 1122.75, the 2016 low, would be required to negate what could be a longer-term basing outlook, since that market was once again well supported ahead of 1100 back in 2016.